Hey guys, beautiful night out here on the lake. Just figured I'd do a quick video for you on CDs, certificates of deposit. All right, I'm going to talk about what they are. We'll go over some of the pros and cons, situations that might make sense for you to open up a CD, and then I'll also tell you where you can get a good rate on them. And at the end, I'll cover where some of you can get a rate that's 10 times better than the national average currently. So a CD, like I said, stands for Certificate of Deposit, and all it is just an agreement between you and the bank. Essentially, you're giving the bank a chunk of change, and you're saying, hey, you can keep it locked up. I'm not going to touch it for a certain amount of time, a certain term. Okay, so a CD will have a different term. It might be a month, 6 months, a year, 18 months, 5 years, etc. And you agree to let the bank have that money. You're not going to touch it, and in exchange they'll pay you a certain interest rate. Now, most CDs pay a fixed interest rate, but there are ones out there that pay a variable rate, so just something to keep in mind. And there is a penalty if you withdraw those funds before the CD matures, right? So if it's a 1-year CD, and let's say 6 months in you decide, I want to pull it out, I want the money for something else, you will pay a penalty, and it's going to be different for every bank. I think generally speaking, for like a 1-year CD, you're probably paying around like 90 days worth of interest. Maybe for a 3 or 5 year CD, maybe you're paying like a year's worth of interest. But just want to let you know that you can get the money out. I kind of think of it as a savings account with a timer on it. If you wait till the timer runs out, you get all the interest. If you pull it out before the timer goes off, you're not going to get everything. But some of the advantages is that it's safe, right? It's FDIC insured, or at least everyone I have seen is FDIC insured. Maybe there's some out there that aren't, but and what that means is if the bank were to collapse, go under as a business, the Federal Deposit Insurance Corporation, the FDIC, will cover that money up to certain limits. Generally speaking, it's $250,000 for an individual. So it's safe, right? And another way you could look at that is, unlike investing in the stock market, it's not going to be fluctuating in value, right? You put that money in there, in that CD, and just like a savings account, as time goes on, it's earning some interest. Now, some of the cons are obviously it's kind of in a sense locked up. You don't have easy access to it. It's simple enough to cancel. I've done it before. You just call the bank, hey, I'd like to cancel it, and boom, they transfer the money to your checking account. But you will pay that penalty. Some people actually might look at the inaccessibility as a pro, right? If you have a tendency to spend money, maybe just kind of having it locked off to the side, maybe that actually is a benefit. And you could also, another con might be that while it's going to pay more than most savings account out there, you're not going to be getting stock market returns. So, generally in the money-making world, it's kind of a trade-off between risk and return. So, since it's not a very risky asset, there isn't going to be a real big return on it. Some CDs actually allow you to add more money as time goes on. Most of them, you just make a one-time deposit, and then that CD will sit there until it matures. But there are ones out there that you can add additional money, while the CD is sitting there baking or cooking, right? Like I said earlier, there are some that are variable rate, but the vast majority of them are fixed rate. And as a general rule, the longer the term, the higher the interest rate, right? So generally speaking, a 1-year CD is going to have a lower interest rate than a 3-year CD, okay? And then there are some CDs that are no penalty. And what that means is exactly what you would think, right? There's no penalty if you close it out early. And as you'd guess, those tend to, not always, but those tend to pay a slightly lower interest rate than a comparable, kind of regular CD. You know, that's because you're essentially paying the premium of having that flexibility. All right, that was the biggest fish. I thought the dang thing was a shark. Some big catfish or something. Anyway, sorry for the interruption. Okay, so what you can use a CD for. Okay, so you can use a CD for like a short-term goal that you don't want a whole lot of risk. You're not willing to have the value fluctuate, because obviously if you're investing in the stock or bond market, prices are gonna be moving around. There's no guarantee, right? With that CD, there is that guarantee though. So maybe you want to buy a car next year, and so you set aside that down payment, and if you get a CD where you can contribute on a monthly basis to it, or however often you want, that makes it a real easy savings vehicle. So something to think about. Another option, I like to use mine for a portion of my emergency fund. And there's a lot of people that don't like that idea, but let me talk you through it. So I keep probably 80-90% of my emergency fund in just a regular old online high yield savings account. But then I'll keep a portion of it in a CD if I can find a CD that is paying a higher rate than that savings account is. Okay, and so how that works for me is I've got 80-90% of my emergency fund that I can tap in that savings account. It's highly unlikely that I'm going to have to tap the whole 6 months worth of living expenses, right? But if I do, I can always close that CD, pay the little penalty, right, a month or two of interest, and then have access to those funds. But since it's unlikely that I'm going to access those funds, I might as well have it earning more interest, right? So I don't know, just a thought, take it or leave it, but it's what works for me. All right, so where can I get a good rate? Put a link down in the description. There's a bankrate.com article that they put out every month and lists the best CD rates across the nation. But there is one deal I wanted to personally tell you about that they don't have listed, and that's through Navy Federal Credit Union, Navy Fed, right? I use them. I'm not affiliated with them. I don't have, don't get any kickbacks. I don't work there or anything. But it's a good deal. I personally use it, have used it at least the past like 5-6 years. And what it is, currently anyway, it's a 3.5% 1-year CD. And I'm filming this here in the summer of 2020. Interest rates are stupid low. Like you can't find, it's hard to find 1%. So a 3.5% 1-year CD is fantastic. $50 minimum. I want to say $3,000 maximum. You can only have one per person, but it's fixed rate, 3.5%, and you can actually make additional contributions. So, if you only have $50 right now, hey, throw the $50 in, get it going, and then make additional contributions. Navy Fed isn't only for Navy members, anyone in the armed forces, active or reserve, retired, veteran, and then the family members as well, right? So. Any immediate family member, right? Brother, sister, grandparents, parents, spouse, obviously. Yeah, if you got a spouse, they could open up one as well. And it's a killer deal. You can't find 3.5% anywhere. The national average right now for a 1-year CD is 0.33. 0.33, all right? And Navy Fed's paying 3.5. So it's obviously a much better rate. So anyway, check it out. I'll put some links down in the description for you. Hope you guys liked today's video. Like, subscribe, hit the bell, all that good stuff. But more importantly, share it with a friend. This is something near and dear to my heart. I love sharing it with people. Because, for whatever reason, it's not a topic that a lot of people are comfortable with for whatever reason. Not something that's typically taught in the schools. So just finally wrapped up my master's degree in personal financial planning. Yay for that. I'm going to have a life again. I'm looking forward to it. But anyway, love bringing you guys videos. Have a good one. Until next time, see ya.